right now on this one because we have the Maruti numbers flashing for you at the bottom of the screen. On a standalone net profit basis, it looks like a beat on street expectations. In fact, we were working with net profit growth of 88%, and it's come in much higher than that. Importantly, it's a revenue-led beat as well. In fact, the CNBC TV18 poll was expecting a revenue of 27,300 odd crores. The company has gone ahead and posted revenues of 2,900 crores. And look at that stock spike. And it's a top-line led beat. Even the EBITDA has come in a little over 88 odd crores, just under 2,900 crores. So that means that the margins have met street expectations. 9.7% is the EBITDA margin that the company has posted. But on an absolute basis, this is a definite beat on both the company's revenue as well as the EBITDA, which has flown through to the bottom line. Just looking at these numbers, in fact, the volumes during the quarter were up by about 8 odd percent, 4.65 lakh units, and that's the number we had already. Okay, 2833 crores on the company's EBITDA, 29,000 crores plus on the company's revenues, and as a result of which the net profit growing and going above that 2,300 crore mark as well, much above street expectations. The street likes it, the stock at the high point of trade. We do have Ashwin Patil of LKP Securities joining us on the phone line on these numbers. Ashwin, initial numbers, what's your take? 29,000 crore plus on the top line, a little over 2,800 crores on the EBITDA, and the net profit around 2,300 crores?
Well, the numbers are quite, impressive this quarter around. Slightly about 3 to 4% above our estimate, and we think that it's a good set of numbers. The company, in this quarter have, it being a festive quarter, and though it was not a very good festive season, but for them it was, better than others. So about 8 odd percent kind of volume growth was seen in this quarter on a YoY basis. Also on a QoQ basis, the numbers were good. So I think that also the commodity prices have gone down. The company has launched a couple of vehicles in the earlier quarter, and that has started yielding to the volumes. So I think the operating leverage was also much better this quarter, and the discounting levels, we need to check out how much were they, but I think that they were not that high as well. So the margins have also come quite, at a good level. So on and on, I think it was a good quarter for them, and slightly above our expectations. But yes, I think that the company has done well on the volume front as well as the margins front.
Okay, yes, in fact, at 9.7% margins, this is the second consecutive quarter of 9% plus margins that Maruti is delivering, which is very good. Last quarter as well, in Q2, Maruti's margins were 9.3%. So this time at 9.7%, it is 40 basis points higher, even on a quarter-on-quarter basis. So that's very good to know. And, even if you look at the consolidated EBITDA number, last quarter, the consolidated EBITDA for Maruti was 2,768 crores. And this time around as well, it's, I think I missed the consolidated EBITDA number. I think it's higher than what we saw last quarter. So good numbers all in all, much better than expected. And operationally, Maruti has improved quite a bit. If you remember, in last year, of course, it's not comparable year on year because, same time last year in Q2 and Q3, there was the whole COVID situation impacting earnings. But the margins had dwindled to as low as 4 to 6%. In Q2 of FY22, margins were 4.2%. In Q3, it was 6.7%. Since then, margins have staged a good recovery for Maruti. Of course, there's the raw material tailwind for sure. But even operationally, things are definitely improving. And I think that's something that the street likes.
Totally, Sonia. In fact, the material tailwind is something that has impacted their margins most favorably this time. They've given us the breakup of the margin benefit, and 310 basis points have come in primarily on account of favorable material costs. So material costs as a percentage of sales is 75.7%. Same time last year, this number was 78.8%. And the company says positive factors that impacted the margins were cost reduction efforts, improved realization, favorable foreign exchange variation, softening of commodity prices as well. The only negative factor, however, was higher sales promotion expenses. So that's the commentary that we have on margins so far.
Also, I just want to mention that the core EBITDA number at 2,833 crores is it's at a multi-quarter high. Now, last quarter it was 2,768 crores. So quarter on quarter, it's about a 2.5% up move. Just the core EBITDA number for Maruti. But if you look at it, on an average, the EBITDA has been anywhere between 1,900 to 2,400 crores. So at 2,833 crores, this is much higher than the average that we've seen in at least the preceding 5 to 6 quarters. I just wanted your thoughts, Ashwin, on how to approach the stock now. Because, there are many triggers for Maruti, right? They are getting into this SUV space in a big way. There are a whole host of new launches as well. The SUV market share, although is subpar, they're looking to grow it in a big way. Would you, based on these numbers, raise either your EPS estimates or your target price on the stock?
See, first of all, I would like to say that the supply constraint issue is also much behind us now, because almost about 95 to 100%, the pre-COVID levels the company has reached on that front. So that is one positive, biggest positive I would say, because that gives them the chance to launch very new vehicles and supply them to a good extent, because now their order book is also quite high, and also they are coming up with new launches. So that gives them confidence and comfort to come up with new launches and launch them and sell them at a good rate as well. So I think that coming 2 years will be very interesting for them from that point of view as well. And also the commodity prices are moving down, so that gives them the advantage of the margins as well. So on both the fronts, like volumes as well as on the margins front, the company is poised for a good FY24 and 25. So I'm always positive on Maruti, like since last 3 to 4 years at least, and continue to be so with a target. With my current target is close to about 9,400. So I need to look at the numbers, and maybe I may increase the target, because we are rolling over to FY25 estimates.
Ashwin, on the order book itself, and this is a line that should come up for you on the screen as well. The company said the pending customer orders stood at about 3,63,000 vehicles at the end of the quarter, of which about 1,19,000 orders were for newly launched models. In the previous quarter, the numbers that we know already, they've sold 4,65,000 units. And by the end of the quarter, them sitting on 3,63,000 vehicles in terms of an order book. How do you read that? First to Sonia and then to Ashwin. Sonia?
Okay, so yeah, I just want to mention one more thing just before coming to that question. At 9.7% standalone margins, as I said, this is the second consecutive quarter of the margins going above 9%. And, there was 9.1% that they did in Q4 of FY22. After that, the margins fell to 7.2% and then a recovery. So this is important because, they had about double-digit margins way back in Q2 of FY21. So, Ashwin, you mentioned briefly that you're constructive on the stock and, you expect more upsides. But do you forecast Maruti getting back to 10% plus margins in this fiscal itself, maybe even in Q4?
Definitely. I think that in Q4, the company will be in much better position because they are already catering to the order book very well, as we have pointed it before. So I think that gives them the comfort, because the raw material prices are already moving down, and operating leverage also is coming to play, because they are catering to that kind of huge kind of number on the volume front. So I think 10% is quite easy for them to just about 30 bips sequential growth is required, and that is quite easy for them. In fact, I think that in FY24 and 25, 11-12% kind of margins are also quite possible for them.
All right. So that's what we have from Maruti so far. In case you've just joined in, the company's standalone EBITDA up 82% on, of course, a low base, but as against street expectations, 2833 crores, as Sonia has pointed out, is at a multi-quarter high. Margins at 9.7, 9.8% too have been much higher than what we've seen over the last couple of quarters. Improvement in raw material prices has led to that margin improvement for the company. The net profit too has been higher than expectations, and all of that has been led by revenues upwards of 29,000 crores, which is above street expectations. So a top-down beat from Maruti, positive commentary coming in, them sitting on an order book of 3,63,000 vehicles at the end of the quarter itself, and all of that bodes well for the stock at the high point of the trade, sitting with a gain of almost 2% on Maruti. With that, we wrap up on this edition of Halftime Report. Business Lunch comes up next.